Here is the overview of today's gold market news. Market performance, price dynamics, and technical analysis. Economical data influence on gold prices. Federal Reserve's key rate cut, implications and diverging opinions. Gold price support, market reactions, and anticipated corrections. Let's have a look at the gold market performance, price dynamics, and technical analysis. Gold experienced a consolidation phase from mid-April to June, but has since reached multiple record highs in 2024 without significant setbacks. Gold closed positively for the first time in 6 days, indicating renewed investor confidence. Gold prices remain strong, currently at $2,638, reflecting a 28% year-to-date increase despite a strengthening dollar and expectations of a Federal Reserve rate hike. After a mild dip to $2,605 earlier in the week, prices rebounded, indicating resilience in gold's value. Gold is in an ascending channel, having found support at $2,600 before the Consumer Price Index release. Key supports include a trend line at $2,580 and the 50 and 200 simple moving average, indicating a bullish trend. A daily close above $2,640 could lead to further gains, targeting $2,720. Silver shows strength, with a relative strength index reversal and an inverted head and shoulders pattern suggesting support. For bullish momentum, silver needs to close above $31.30 and break above $32.50. Let's have a look at the latest economical data and geopolitical influence on gold prices. The upcoming Producer Price Index data is expected to further impact market trends. The Consumer Price Index rose to 0.4% year-over-year in September, surpassing the expected 2.3%. Gold prices rebounded following the Consumer Price Index release, which showed a 0.2% increase in September and a 0.3% rise in Core Consumer Price Index. This data suggests no imminent Federal Reserve interest rate cuts. The stronger-than-expected jobs and consumer price index reports indicate inflation is higher than anticipated, which has caused uncertainty about future rate cuts. However, concerns about rising prices due to increased spending on repairs following Hurricanes Helene and Milton in Florida could influence inflation pressures. Silver also reacted positively, closing higher at $31.16. The strong performance of both metals following the Consumer Price Index release suggests potential for continued upward movement. Analysts highlighted geopolitical uncertainties as the major drivers of gold prices in 2024. Gold's resilience amid changing global economic conditions indicates strong safe haven demand, possibly influenced by recent developments in geopolitical events, such as conflict in the Middle East and in Ukraine. Next, let's have a look at the Federal Reserve's key rate cut implications and diverging opinions. The Federal Reserve had cut its key federal funds rate in September from 5.25% to 5.5% to 4.75% to 5%, marking its first cut since 2000. Atlanta Federal Reserve President Raphael Bostic suggested a potential pause in interest rate cuts, stating he would be comfortable skipping a rate cut in November if data supports it. Bostic highlighted the choppiness in jobs and consumer price index data, indicating caution in making further cuts. While many Federal Open Market Committee members supported the recent rate cut, there was disagreement on the magnitude, with some preferring a smaller cut of 25 basis points instead of 50. The recent rate cut appears to mark a bottom for interest rates, with mortgage rates rising. The 30-year mortgage rate increased to 6.32% from 6.12% a week earlier. Moving on, here are the latest update on gold price support, market reactions, and anticipated corrections. Central bank buying continues to support gold prices, even as expectations for lower interest rates were pushed back. Despite the rise in gold prices, exchange-traded funds holdings do not fully reflect this momentum, suggesting a disparity in market positioning. Comments by Federal Reserve official Raphael Bostic have contributed to selling pressure in the stock market, with indices like the S&P 500 and Dow Jones experiencing slight declines after hitting record highs. The 10-year Treasury yield rose to about 4.1%, up from a low of 3.62% following the Fed's September meeting. Analysts anticipate a price correction before the seasonal increase in demand expected in December and January, emphasizing that the price movement in recent months is one-sided. Reasons for a correction include technical factors and changes in buying behavior, particularly with unconfirmed reports of China pausing gold purchases.